Hola guys and que paso? Welcome to another edition of Crypto Postmortems. We're going to go over Bitcoin today, and we're going to look at a redistribution range that played out several weeks ago. And we're going to scrutinize the volume spread analysis and look for indications that the distribution, or the redistribution in this case, was imminent by smart money. Remember, smart money, institutional order flow, they try to hide their footprints, so we don't really know what's going to go on. Often it's a clandestine operation, campaign, buying campaign, absorption accumulation campaign, where they don't want certainly not retail traders, to know their final of their intention of what they intend to do, which either accumulate, which would be to mark up, or redistribute, which would mean to dump. In this case, they dumped. We've been in a macro distribution since back in November, I think. I think it's been where when Bitcoin topped out at 69,000. Since then, it's been a macro bear cycle on the macro. And so all we are really seeing now, with the exception of counter trends, are redistribution. So these crypto postmortem range series editions right now that I'm putting out will focus primarily on redistribution. So without further ado, let's get into this one. This one, like I said, is Bitcoin. This is on the Coinbase exchange, and I have this on a 30-minute time frame. So these candles are 30 minutes. The 30-minute, I think, is an ideal time frame for what I like to call forensic analysis. It's not it's a higher time frame than a say like a 5-minute or a 10-minute, and it's lower than the hour or 2 hour. Obviously, I think it's in that sweet spot where you could see what's happening, what the sentiment is, what the intentions are, basically, on the micro, because what goes on in the micro very often plays out in the macro. So as above, so below. As in micro, so in macro, when it comes to trading in crypto, very often. So with the 30-minute time frame, I find it ideal for doing these forensic analysis on these coins. So we see here, let's see, let me center this more and then blow this up a bit. So of course, in order for it to be a distribution, it has to come out of a markdown. Here we come, the markdown with the primary support occurring here. Make sure I have my marker on, and with the selling climax here. And then from with the selling climax, we could draw a trading range support, which we've done. This is a good habit to get into. You want to draw out your trading range as soon as possible, as soon as the crypto or whatever asset you're trading begins to consolidate laterally. So the border on the bottom would be the selling climax, and usually what we see is it comes back up to a certain extent, maybe not usually as far up as the primary support. Usually it's like right beneath it, where we find the automatic rally, where it tops out there, comes back down, and here we see it came back down halfway. So we could technically say that this is the secondary test, where it bounced off trading range midpoint. See the 0.5 Fibonacci level, which is like midpoint between support and resistance. But I like to count it when it comes all the way down as well. I count this as just like one complete wave. And so we have the secondary test here. It mitigated this liquidity void between the selling climax and the secondary test. You're going to see that a lot in the beginning of these trading ranges. That's perfectly normal. And then even on top, we see a lot either like the primary support mitigating with an upthrust, like it did here, or the automatic rally in some cases as well. But we see this upthrust here. This we'll just call it a UT here, and this mitigates the primary support. And then from here, we can sort of define like a regression trend of the tops and the bottoms of the price action. Now, keep in mind, we still don't know what this is going to do. Remember, we're pretending like this is still playing out. We've got maybe we've considering buying here. Maybe we think, oh, this is the bottom. Bitcoin hit the bottom, $20,000, $20,000 Bitcoin from 69,000. Yeah, this could be a viable bottom. And so we begin to see a series of rising lows and rising highs, and they kind of go up on a diagonal here. And so we see a clearly delineated trading range, or rather microtrend support coming up, and that would be the regression trend. That would be the highs and the lows of this regression trend. And TradingView even has a tool for regression trend where you could do it. You just draw it off the low of the selling climax, bring it up. It won't let you go any further to where the price action currently is. Click on that, and it automatically draws out this regression trend. So it's a really cool tool to have. So, but we see the price action bouncing in between the highs and the lows, the support and the resistance here. And remember, we're still trying to gather a bias or a sentiment of what's going to happen at the end of this. And so what begins to clue us in, we begin to look for clues as what going in. And the first thing we want to do after we determine the trend, the basic trend, is look down at the volume. Always want to look down at the vertical bar volume and see what supply and demand are doing. And we see here, we see clear, if you just eyeball this first half of this trading range, we see clear supply predominance, whereas the bars of supply bars, the red bars, are overtowering the green bars. And not only that, we see building supply. We see supply building up, not starting high and going low. We see it starting low and going high, building momentum, and we see that on these down thrusts here, on these pullbacks, especially the ones coming from trading range TRR, trading range resistance, back down to trading range support, blowing right through midpoint, while the volume builds in supply. And we see the same thing here on this next pullback. Supply volume building and predominating over demand. And as this goes on, it remains faithful and true and respecting the support and resistance of the micro trend. We begin to see demand volume bars spike. These are demand spikes. These are volume spikes of demand. And when you see these start to happen in the middle of the trading range, you want to look and see what the price action is doing in relation to where it is in the trend. And we see these spikes happening as it bounces off support. So all this means, it doesn't mean that people are buying and that they're looking to pump it. It means that the market makers are careful to they don't want the price to go too low. So whenever it starts hitting these thresholds, these resistance or support rather thresholds, demand is generated to propel the price back up into the range, into the regression trend in this case. And so that's what these are. But I want you to notice as the price ascends, see there's a slight incline to this regression trend. The demand is ever so slightly decreasing. It's decreasing. Demand is decreasing while the price is rising overall. So that is another big clue that there could be at the end of this range a bearish bias. We see that when the price action hits the top of this regression trend, the resistance of this trend, this would be the micro resistance of this trend, that we see that the price does not go beyond the resistance. It gets stopped out and comes back down sharply. We see like right away, we see 2 or 3 volume spikes and then boom, it goes back down, and then we see 5 or 6 successive supply bars in the volume. So that means again that there is a failure to rally, that the price is being deliberately manipulated to remain between the boundaries of support and resistance in this regression trend. We see it going down. We see another wave come up, and this time we have a big rejection wick. And we could call this, in retrospect now, the UTAD. This is the upthrust after distribution, because this was the highest point of the range. We didn't know that then, but we know that now looking back. And then we have this big sell-off that comes back down. Here we have this big volume of supply that comes in. And then to top things off, we begin to see this parallel little intra-channel consolidative price action, and the price is going down. You see this, the wave is going down, but supply is going up. So yet another indication of bearish bias. And then we have one last failure to rally where it comes up here on not so high demand. Basically, demand is just about where it's always been. We haven't really seen a lot of overwhelming demand, and that gets stopped out with major stoppage supply as the price falls through the ICE, which is the anchored VWAP, which I drew from the secondary test back in the beginning of this range. The secondary test went down a little bit lower than the selling climax, so that's where I anchored my VWAP. And it was right after this channel, right slightly above trading range support, where the price fell through conclusively through the ICE, which is the VWAP, fell through trading range resistance. It fell through the regression trend support, fell directly through, did not collect, did not pass go, did not collect 200, just like Monopoly, boom, fell right through the midpoint of the range. It didn't even stop, fell through the support, and it was just a free-for-all at that point. So, judging by the amount of supply volume that came up immediately following this failure to rally, it should have been conclusive that this was going to drop. So we take all things into consideration from the beginning of this range, including this rejection wick at this UTAD on pretty, we're not seeing correlation between volume and price action, especially on demand. We're seeing a lot of effort seemingly, see these big overtowering demand spikes, but the price wasn't really moving at all. So that's an indication that there's not a lot of there's not value. There's no value above a certain limit, regardless of how many buy orders are in place. The value is not increasing. And then to see this gargantuan freaking rejection wick of this UTAD and then this downward channel with rising supply. So we have divergence there with the supply. It's just another indication of bear volume. And then boom, we have the conclusive stoppage supply. So what do we learn from this? What are some of the things that we could take away from this? It's like I labeled this ascending channel supply expansion. Basically, we have supply expansion going on and demand shrinking throughout this entire range. So failure to rallies, this is just one of those that you just take everything into consideration. And so anyway, I hope this was informative for you. This was true volume spread analysis. I mean, you really can't, if you didn't have the volume, if I were to take away the vertical bar volume and just go off the price action, we would think like, yeah, the price is, this is probably going to accumulate. Like this here is a bottom, and we could see the price in the end coming up like this. Because after all, it's a regression trend. It's on an incline. And look at these volume spikes. It seems like demand is predominating. And I get that a lot. People say, well, look at all these demand volume spikes. I'm like, well, you got to look at, when you see demand coming in, you got to look and see where the demand is coming in. And very often you'll find demand coming in when the price action is hugging support lines. And then suddenly demand surges in and it propels the price up a little bit, but not too high because it doesn't want to go too high. It doesn't want to mark it up yet when the market makers don't have enough accumulated yet. They don't want to mark it up too high and make all the retail guys who are still holding bags rich. So demand is brought in to just keep it from dumping altogether. And but also you got to look and see if there's a whole bunch of demand coming in, but you see consecutive systematic failures to rally at micro and macro trend resistance levels. And that's another thing. That's a bearish ultimately. And paradoxically, that's a bearish signal. So, all right, that's enough out of me for this one. I hope you guys got something out of this. Like, subscribe, and you'll get more updates. I really appreciate you guys. Check out my chart history on TradingView, 80 to 85% win rates. And I run a small trading group, very affordable to be in. To be distinctive from the guys who run these overpriced signal groups. So anyway, don't want to trash talk anyone, but check it out sometime. And I I wish you the best, safe trading, and yeah, y'all take it easy. Okay, guys, take care. Adios. Bye-bye.